Welcome to Enlightened Wealth Strategies, the podcast where insight and knowledge meet opportunity. Please join us as we navigate the world of finance, discovering actionable strategies to help you achieve your personal financial goals.
With decades of combined experience, we're here to shed light on the topics that matter most to your financial well-being. Whether you're accumulating, preserving, or distributing your wealth, this is the place for you.
Now let's dive in and start your journey to financial enlightenment.
Welcome to another episode of Enlightened Wealth Strategies with James and Jim.
Where we enlighten you.
Where we enlighten you.
Well, welcome, Jim. Nice to see you again.
Same here.
Yeah.
So we have a special guest today here in the studio with us.
We do.
Why don't you introduce him?
I will certainly do that. So, Jim, we have a gentleman who has been a guest with us before.
Exciting.
And we are going to discuss the topic of cryptocurrency. It's Dr. LaBelle. Dr. LaBelle, welcome.
Pleasure. Thank you so much.
Nice to have you back, Doc.
Thank you for having me back here. I'm excited. It's a great topic. It's a volatile topic and extremely exciting times coming ahead.
I know we had a discussion with you before in another podcast. Let's circle back a little bit. Just give us some fundamentals about the topic of crypto.
Yeah, for our listeners, so that they get an understanding of what we did cover, but just addressing some of the basics.
Certainly. So people always ask me, what is cryptocurrency? And cryptocurrency is not actually a currency. It's not money, fiat. It is property. So the way that crypto is classified today is that it is digital property that nobody owns except yourself.
So you can't take it to the bank?
Currently, you can't custody it at a bank just yet, but the regulations are being set and banks will start to custody your crypto. Your property can be custodied by your bank.
In the meantime, though, there are places that people could place their cryptocurrency. And some of those names are?
You can place your cryptocurrency in two locations if you so wanted to. The first one is on-chain or on an exchange.
Okay.
Which means that, like E-Trade or like Fidelity, where you are trading your stocks, you can trade your cryptocurrencies on an exchange. And regulated exchange in the United States exist. They're very safe exchanges. And the exchanges are secure enough where you, as an investor, you feel comfortable leaving your cryptocurrency on the exchange. The other location where you can hold your digital property is on a USB stick, off-chain, meaning that you are taking your cryptocurrencies, Bitcoin, for example, you're taking it off of the exchange and putting it in your hard digital wallet, which usually it's like a little USB stick that plugs into your computer.
And why would somebody want to do that?
So there are several reasons why people would want to remove their cryptocurrencies or their digital property off of an exchange. And one of the best examples is what happened with FTX and the FTX collapse. Do you guys remember?
I do, yes.
About that? FTX was a regulated crypto exchange in the United States. It was trading in the United States. It was based in the Bahamas. but they were caught with doing fraud. And so the people who had their digital property on the FTX exchange were locked out of the exchange, not able to remove their digital property off of the exchange. Essentially, they locked them out.
Let's step back for a second. Crypto is a digital format. How do people convert it to currency?
Fiat currency,
Yes.
real dollars or another.
Or utilize the digital currency for the purpose of everyday stuff that we're used to?
It's a great question. Let me just quickly get back to the piece we were just talking about, just 1 minute. FTX collapse, you couldn't get your cryptocurrency off of the exchange. If you were smart enough and you said, hey, you know what, I'm going to keep my digital property off of the exchange, you can simply move your digital property from the exchange onto a hard wallet, or essentially you become the exchange.
Okay.
You're taking it from the bank and you're putting it into your pocket. Circling back to your question, it's extremely easy to switch from your digital property into US dollar by simply trading your cryptocurrency, or what I like to call it, your digital property, from a cryptocurrency to US dollar. You can simply swap it out. Bitcoin is trading at $89,000 at the moment. If you sell one Bitcoin, you will be receiving 89,000 US dollars. You simply tell the exchange, I'd like to move that $89,000 into my bank account. Takes about 2-3 days and the money is there.
Okay.
So it's become very simple.
Jim,
I
you blanked?
yeah, I just blanked.
Well,
Well, why don't we do this now? Now we've basically addressed the fundamentals, more or less. Let's just give an overview of what is currently going on, because many people that are out there listening are going to want to know, okay, why is it volatile? Why are the markets moving up and down? Why is it that some countries, for example, are beginning to use cryptocurrency as a reserve currency, like El Salvador has done this, right? The United States is talking about it, and many other countries are buying up crypto, especially Bitcoin. But Bitcoin's not the only player. Everybody focuses on it because it's the most widely known, most popular. But as you and I both know, that there's all types of other currencies that are maybe secondary class, and then there's the third class that are unknown that I know you are aware of, and perhaps we could touch on each one of those categories.
Sure. So there's a lot of questions within that question that you just asked.
I did, yes.
The first question is, why is Bitcoin so volatile? Bitcoin is attached to everything else that's going on in the markets right now. And there is some uncertainty in the market. We are also in a cycle where Bitcoin has traditionally started to peak on the fourth quarter, about 12 to 18 months after the Bitcoin halving. Okay, so I used a slightly strange term, the Bitcoin halving, but every 4 years, Bitcoin goes through a halving cycle, or the supply is cut in half. So I had a chart, but I'll kind of pull it up here. I won't really show it to the guests just yet, but if you guys can listen to what I'm saying here. In 2012, we were able to make 25 Bitcoins every 10 minutes. In 2016, we're able to make 12 and a half Bitcoins every 10 minutes. In 2020, we can make 6.25 Bitcoins every 10 minutes. And in 2024, we can make 3.125 Bitcoins every 10 minutes. Every 4 years, the supply output gets cut in half.
And why does that happen?
It is programmed into the algorithm of Bitcoin. The algorithm gets more and more challenging to figure out, and the output gets cut in half.
All right. Now, how does that affect, correct me if I'm wrong, is there not a limit on the amount of Bitcoin that could ever be issued in a lifetime?
There are 21 million Bitcoins that can be created, and we're inching closer and closer to that 21 million.
Where are we now?
We're somewhere around 20 million.
Well, so it's getting very close.
It's getting very
and
close.
How long has Bitcoin been issued? When did it start?
It started around 2009. It'll end around 2136.
Based
we still
on
have
this. Oh, so we do have room. Okay.
We do have room.
All right. So that leads me to the next point I wanted to make, and then we'll go back to the crypto. When we introduced you, we didn't really get into introducing you per se, but I do want to let the audience know that you are my dentist.
Absolutely.
And we've had many, many conversations over the years about economics, finances, and then, of course, the cryptocurrency. And that's one of the reasons why I wanted to have you join us again. But I wanted to ask you this question to allow the audience to know why you got into doing cryptocurrency as a professional. Like you're a dentist, but you love talking about crypto and trading in it.
I do. I'm both a trader and an investor. I got into cryptocurrency. One of my patients many years ago wanted to pay me a substantial amount of cryptocurrency for his dental work in the tens of thousands of Bitcoins. And I refused the payment in Bitcoin. I said, no, I'd rather get paid in cash. So he couldn't pay me in cash at the time, but he came back several years later and brought me cash and said, I'm ready to do my dentistry. So I thought for a minute, how is this even possible? You're so young. Where did you get the money from? And he said, I sold some Bitcoin. And that started me into looking into what is Bitcoin and why is it allowing this young guy to pay for this extremely expensive dental treatment. I may have not have been talking to you today if I would have accepted that offer from him.
In hindsight, right?
Bitcoin, in hindsight. But it got me into cryptocurrency and just everything that happened during the time when I became a dentist around 2007 with the market collapse. It made me think twice about general markets and is there a solution to the volatility of our markets? And is there something that is a depreciating asset versus an inflationary asset? And once I started dwelling into crypto and Bitcoin, I quickly realized that, hey, this is a asset class that's getting more and more scarce. So I better jump on the boat as quickly as possible.
Yeah, it's interesting too, Jim. I know that when we do planning for our clients and we're constructing their investment portfolio or reconstructing, because if we inherited from them at some point in time, you know, we're diversifying, we're doing all this moving and, you know, we got to have fixed income securities, we have to have equity and then the various forms of equity and subcategories and
alternatives,
et cetera, et cetera. But often, and even now, gold and silver have moved up dramatically over the last several years. And I've always been a proponent of people investing in that as an inflation hedge. But over the last several years, too, I have taken the fact that cryptocurrency should be an important component within an individual's investment portfolio. What that percentage is, I think it really comes down to each individual and their age and stage of life, where they are, what they're accepting, what risk tolerance they can accept.
Right.
Even our firm has come, if you get on our investment conference calls, they comment about, sometimes, people should have, some small percentages in precious metals and cryptocurrency. Maybe you put those two in the same category. I don't know. I think they're very different, but you're talking about 3 to 4 to 5%, depending upon the individual at a minimum. Because and the reason why I bring this up is because you describe the differences between the asset classes, inflationary versus non-inflationary. So maybe we can tackle that.
There's more demand. There's a fixed supply. Value goes up. Demand is increasing. Supply is decreasing. Price follows. And to your point, gold and silver, we can really say true money, correct? Hard money. Bitcoin, many would like to call it digital gold, or
can't feel it, can't see it.
You can't see it, you can't touch it.
Yeah.
But it is a digital property. It is a new form of property.
I agree.
And it is a property that is getting more and more demanded by governments and Fortune 500 companies globally. There is less and less of it, and the price will essentially follow that type of a demand. Cryptocurrency or the crypto market is extremely volatile. We're very used to seeing 70 to 80% pullbacks in Bitcoin. And it's not uncanny to see that in the next 12 to 17 months from now. So from where we are today, we can still see a significant pullback.
And you expect to continue to see that into the foreseeable future?
It's a great question because from a trading perspective, Bitcoin is forming a fairly bearish pattern at the moment, but there's still legroom to move upwards. So as a trader, we think about, can we make a little bit of profit off of the volatility during this pattern? And as an investor, we say, can we purchase the asset class at a slightly lower level or have a better entry level if we're just a patient?
We're investing for the longer haul.
Right. If you're investing for the longer haul, like Michael Saylor does, they just purchased a couple of thousands of Bitcoins, a couple of 100 million, and his company essentially invests at every level.
Who is he?
Michael Saylor is the largest private cryptocurrency holder of Strategy B, formerly known as MicroStrategy. They own several $1 billion worth of Bitcoin. He's one of the biggest Bitcoin advocates globally. And he talks about Bitcoin in a very long-term investment style perspective, where he always says Bitcoin is a 4-year hold or a 10 to 20-year hold. You buy it, you hold it, you give it to your kids when they're ready for it. It's a extremely volatile asset class. And if you can't handle that type of volatility, it's not for you. I had a couple of friends recently text me and say, hey, listen, I'm down tremendously from my entry levels. What do you think I should do? And the real answer is just sit tight. You're in an asset class that is designed to be volatile. And if you can't handle that, you shouldn't be in it.
And what causes the volatility in this particular currency, the cryptocurrency? as opposed to the stock market, which most people are familiar with to some degree, and it has many years history, so that you can point to and say, okay, I understand the equity markets move up and down, usually on an upward basis, but are we also facing perhaps a bubble there? I don't know. So will there be a change in the equity markets? But how does that compare to I don't want to say it's in the infancy, but comparatively speaking, the crypto market is in its infancy compared to the equity markets?
A couple of minutes before, you were asking me a similar question, and I was touching upon we're in the Q4 post-halving, which means that we've already gone through the cycle of having less supply, right?
Mm-hmm.
And that happened last April 2024. So we are at a point where the market historically starts to become bearish. We are at that inflection point where the market, or people like me who have been looking at this market for many years, are saying, okay, the market hit a high in Q4 of the halving cycle, the post-halving cycle, and now we're entering the bear season or the bear market. And so any small movement in Bitcoin and the market becomes extremely unstable. And so there is selling pressure at the moment with Bitcoin to drive the price down. And there's a lot of technicalities that I can get into with you guys, but it's perhaps for another podcast. But we are at an inflection point in the market where the general consensus is that we are entering a slight bear market in the crypto cycle. That's what's mainly driving the price downwards at this
and that
moment.
applies to all the various cryptocurrencies that are out there, because Bitcoin, if it goes down, everybody follows.
Bitcoin is the granddaddy and everything follows. However, there has been some cryptocurrencies outside of Bitcoin, right? We call them the altcoins or the alternate coins, where we saw the price of Bitcoin drop down and some of the altcoins go up. So we're also at a point in the market where some of the asset class does not follow exactly what Bitcoin is doing. But in general, if Bitcoin drops, the rest of the market is going to drop with it.
So then that begs the, maybe I was going to say question, but the comment perhaps is that not only do you diversify your assets, but within the asset class, you would want to diversify. So people shouldn't only be invested in Bitcoin. They should also look at the other currencies. So firstly, what are the other, as I pointed out earlier, what are the other secondary currencies that people should consider, or they are more popular? And then some of the alts.
Right. So you call them other currencies, but let's just classify them as Bitcoin and altcoins.
Okay.
So there's Bitcoin and then there are altcoins. And I like to call it the all-American portfolio, where there's a lot of US-based cryptocurrencies, cryptos that have been created in the United States. The biggest one is Ethereum, which is the next level down from Bitcoin. Mm-hmm. Ethereum is a platform where companies can build on top of the Ethereum blockchain to get exposure into the cryptocurrency world. Ethereum is the next largest cryptocurrency by market cap. We have Ripple or XRP, Cardano, ADA, HBAR, ICP, Link. There are a lot of other cryptocurrencies that are US-based cryptocurrencies, which if you're having an all-American portfolio, those are very important to have. These cryptocurrencies that I just spoke about are blue chips. We can think of them as blue chips. They're some of the originals. They've been there from many years ago, and they're still there today. Their market cap is in the billions, and they're not going anywhere. In the short term, there's extreme volatility. So something that was trading at $23 is trading at $13 today. That type of volatility is something that some investors can't really handle. For the younger generation, these investors are willing to purchase and dollar cost average into these types of currencies so that they're getting very slow and steady exposure to the market at all levels.
Now, how many of these that you just described and named, are they involved in the blockchain?
So every cryptocurrency that's traded on an exchange is on a blockchain. And when we talk about the blockchain, I want you to think about a distributed Excel spreadsheet. Okay, let's just bring it down to its simplest form. I'm handing you guys an Excel spreadsheet, and you guys can see every transaction that is happening between every single person globally.
Right.
At any single moment.
So it's the infrastructure of the trading, and that's the blockchain.
Correct.
So every transaction is really like an audit trail. You would describe it in accounting, perhaps?
Yes.
And no one can go in and change it. No one can go in and revise it in any way. It's there permanently.
Correct. And it's truthful. And that's why hacking the system is extremely complex and virtually impossible. Because once the transaction goes through, it can be voided and it can happen twice. If you and I were transacting from different parts of the world, where I'm sending you some cryptocurrency, I will know definitively that you received it on your end by looking at the blockchain. So, in a legal court, let's say you said I did not receive it, but it is on the blockchain, then we have evidence that it has in fact
proof.
Been received, and it is proof.
Right.
100% definitive proof that you received the transaction that I sent you.
So I'm going to shift gears a little bit. What does mining mean?
You took my question.
Well, and I think I understand some of it, but I want to make sure that the audience and the listeners understand this. And for example, we have the Trump administration that's talking about bringing all these different companies from around the world here, and we're going to be the leader in technology. But we have a national grid that is obsolete and decrepit. How are we going to handle all that if, going back to my original point with regard to mining? So maybe you can describe that and what I just pointed out about our current economy and where we're trying to take it. How does that one relate to the other?
It's a great question. Let's just talk about crypto mining companies. The United States is leading the way in Bitcoin mining companies. We have the largest cryptocurrency or Bitcoin mining facilities in our country.
What exactly is mining?
Mining is a facility that is calculating the Bitcoin algorithm. So I like to, when I talk to people about Bitcoin is a mathematical equation where A plus B equals C, right? So I want you to think of a mathematical equation. Let's just use a very simple one.
And so you have to solve for that.
You have to solve for it.
So that's what the mining is. And that's why you need the data mining centers, and you have people that are trying to solve these problems.
Correct. If I told you 1 + 2 = 3, where 3 is the Bitcoin, then we just solved the equation and we just created a single Bitcoin. Now, that's in the simplest terms, but the calculation of the equation is extremely complex. It gets more complex every 4 years as the supply gets cut in half. So it takes longer and more computing power every 4 years to create the same output.
So this is where our energy that we have, right? Well, I don't want to say we have a shortage, but we need more. And
We do.
if we're going to continue to be the leader, and if not continue to be the leader, even go further than that.
Yes, and a lot of Bitcoin mining companies are solving that through utilizing their computers that are constantly in motion and moving to utilize their power to power the grid.
So they're creating data mining farms.
They're creating data mining farms as well as electric output farms.
Interesting.
So they're giving electricity back to the grid. And a lot of them are using green ways to do it. El Salvador, for example, is using volcanic power to power their Bitcoin mining facility.
That's interesting.
It's a fascinating way that they're doing it. Nayib Bukele just texted on X the other day. They're up maybe 100 million on their Bitcoin investment. And it was a big news story when they were saying they're going to use this volcanic power to power their Bitcoin mining facility. So a lot of green energy is used to mine Bitcoin. Think of it walking into a warehouse where there's, do you guys remember those old Dell computers underneath your table?
Yes.
Remember those big boxes?
Right.
I still have one.
Yeah. Imagine
Because you're old.
thousands and thousands of those boxes sitting on shelves, spinning 24/7, calculating 1 + 2 = 3, where 3 is the Bitcoin. Now imagine walking into this warehouse and there's endless and endless rows of these boxes
All linked together.
all linked together. And imagine the heat that's generating.
So these are all data servers,
Yes.
effectively,
They're
right?
effectively data servers that are calculating the Bitcoin algorithm and trying to compete globally to find the answer to the equation. Because remember, there are Bitcoin mining facilities in El Salvador, in the United States, in
Middle
China,
East,
in Australia,
all over.
and they're all competing against one another to come up with the answer of 1 + 2 = 3.
You're oversimplifying it,
I'm way oversimplifying it.
but that's okay.
But they're all competing to come up with that answer, which is 3.
So by mining, they're solving the equation
And that creates
and
the currency.
creates the currency.
It creates the digital property, which we know as Bitcoin.
Once they receive the digital property, though, it's theirs
It is.
and it's logged. And so nobody can take it from them.
That's correct. And what they do is they can sell that digital property, which we call Bitcoin, because remember, they need to pay their electricity, they need to pay their rent, they need to pay the facility fees and all the employees, and they need to be profitable for their shareholders. So they do have to sell some of that Bitcoin that they are creating. It's currently trading at $89,329. They have to sell that Bitcoin in order to pay.
To cover their expenses.
Like
any other business.
Correct.
Right? Okay, so that leads me to the next question. We already concluded or believe, us as advisors, our clients or any other clients or other investors out there should actually consider a portion of their portfolio being dedicated to cryptocurrency. One of the questions that I would have is, okay, great, we have it. We're going to hold it long term. But in the interim, what you just described is, okay, we're doing this data mining. We're creating cryptocurrency. We got to pay our bills. We sell part of this. We hold on to this. What does it allow governments, individuals, companies to do with cryptocurrency to solve problems that they may have, which is paying things off like we do with real currency.
Yeah, it's hard to say that what does digital property help solve in paying for things, because a lot of it is used as an investment portfolio. It's almost like saying, well, can you please give me your gold so I can pay my rent this year for the season? It's hard to say it like that, because a lot of it is not used currently to pay for our national debt, for example, or to pay for interest that we owe on the debt.
But will that eventually happen? Maybe?
So it is in the talks, and the way that the global financial system is looking today, it's going to look very different in 10 to 20 years from now when, and I hate to say it, central bank digital currencies may be an actual thing, and we will slowly move away from the dollar as we know it into the digital form of the dollar, which can be thought of as a stable dollar or a stable coin. And
Do
that
you think
in
that
turn
can happen though until I'm assuming there's going to have to be some sort of regulations or oversight.
Well, I don't know that I want to go down that path, because as Doctor pointed out, I know it's probably not a thought that you want, but you think it could be very realistic possibility, if not a probability, if it happens
right
10 years from now or 15 years from now. But how does that relate? So we'll take that statement. How does that relate or affect cryptocurrencies? Because are they going to create a digital dollar that is tied to the cryptocurrency, or it's just going to be a totally separate one? Because cryptocurrency, as we both know too, it's not central bank controlled like the fiat currency that we have and the majority of the world's countries have. There's some exceptions, but most have a central bank. Love them or hate them.
Right. So we have to think of it as a investment property, which is deflationary, which will gradually increase in value, and we compare that value today in dollars. And as the global money supply continues to increase and the dollar is perhaps devalued, digital property will become more scarce and more valuable. Does that make sense?
How safe does that make it then?
Well, it's actually very safe. It's one of the safest ways to store wealth, so long as you do not lose the information where you can access your cryptocurrency or where you can access your digital property.
I can remember an episode of Big Bang Theory where they, now this is as crazy it is, they were mining for crypto in that series or that segment. And Sheldon took, I can't believe I'm talking about this way. Come on. Sheldon took and downloaded the information onto a thumb drive.
Right.
Which is what you mentioned, right?
And they lost the thumb drive.
Right.
And the gentleman who found the thumb drive erased it.
Right. Well, that's a great, it's a great episode. And the thing is that if I give you my thumb drive right now with all of the crypto that I own, you will not be able to access that hard drive unless you know my passcode.
Right.
So I can essentially be on the beach in...
But if it's on a thumb drive and you lose the thumb drive...
You buy a new one, and the new one will ask you, do you have a password? And when you say, yes, I do have a password, and you plugged in a brand new USB hard drive into your computer, but you give it the password from the original hard drive, The original hard drive is obsolete at this point because nobody can access it. But because you still remember the password, you have access to your digital property.
It's the fallacy of that episode.
Well, to a degree. It's interesting you said that. I have a client who has, I think, a half a Bitcoin. And they did this and they can't find the password.
Right.
They lost it.
In the crypto world, we say, not your keys, not your coins, which essentially means that if you are trading and you're trading your cryptocurrency on an exchange, a regulated exchange, your cryptocurrency is on the exchange. It's not in your wallet. It's not in your home. So if you want to take it off of the exchange, you have to move the cryptocurrency from the exchange onto your hard wallet, or we call it an external wallet.
Okay, I'm going to change gears a little bit, and then I want to go into some of your trading because you have your computer with us. So I do want to dedicate some time to that. But how do you view and how do you feel about the fact that Wall Street has got highly involved in crypto and issued quite a bit of ETFs that are out there? Of course, they had to go through approval through the SEC a year or two ago, but we see that becoming more and more popular. How does that, number one, how do you, like I said, how do you feel about that? And number two, how does that affect the market?
I like the fact that we have more regulation now, and everyone in the crypto world was waiting for these ETFs to come along, and now they're here, and it gives exposure to crypto to the broader market. So from a volatility perspective, it creates maybe a little bit less volatility in a sense, because now your hedge funds and your big fortune companies are offering it as part of their portfolio.
It legitimizes it in a way.
And it also perhaps maybe gives a little bit stability to the market. Although I do have to say crypto is the most volatile market that you'll participate in. So when I say less volatility, it's just a little tiny bit.
Well, I liken it to, and I may have said this in our first episode, is that I liken it to the Wild West, the crypto markets. And I think now that it's been legitimized and approved and somewhat regulated through the SEC and Wall Street, financial institutions and wirehouses are more involved in it, I think if you your history, there was a period of time where the cowboy was being phased out in the 1890s because the automobile in 1890s and early 1900s, they were being phased out and the automobile was coming into play. And it's sort of, I kind of liken it and analogize it to that. Maybe I'm off, but there's, as you described, there's still volatility. So
no, you're absolutely right. And crypto is still fairly new. Right? The inception was around 2008, 2009, and here we are in 2025. So it's a younger market. Mm-hmm. Just to get back to your question about the ETFs, some of us who've been trading the market for many years don't really love the ETFs as much because you're not actually owning Bitcoin itself. You're owning an IOU to Bitcoin. And I always ask my friends, what would happen if the IOUs in the gold ETFs or the silver ETFs, if everyone said, hey, can I get my gold?
It ain't happening.
And the banks say,
it ain't happening because they don't actually own the gold or the silver.
Right.
And so is that the same situation?
It's the same situation where the digital property of Bitcoin, even though, let's say they hold 500,000 Bitcoins in their portfolio. With an ETF, you can essentially split that 500,000 many times and sell IOUs, which we don't love that. Many of the traders that I trade with, we don't love the fact that we can make the liquidity more. And let's say we have 21 million Bitcoins, and now we can split those 21 million Bitcoins many times, well, we're diluting the supply.
Correct.
However, in essence, the price of Bitcoin should continue to slowly increase through the years because the asset class is getting more and more rare to mine, right? Remember, I had a chart here that I created this morning using Grok. I thought Grok was great for this, and I'm not sure if our audience may be able to see this, but if you guys...
Well, let's speak to it for sure.
Yeah. We started out with creating 50 Bitcoins every 10 minutes, 25 Bitcoins every 10 minutes, 12.5 Bitcoins every 10 minutes. Now we're at 3.125 Bitcoins every 10 minutes. And in 2028,
that's going to split.
We will
again.
be at 1.5625 Bitcoins every 10 minutes. So the miners, which we touched upon, have to continuously pay their electric bills, and they have to pay all of this company stuff, right? And electricity, is it going to go down in 4 years? Is the price of electricity going to decrease by 50%? No. I don't think so. So these mining companies are going to get hit with higher electrical costs, higher outputs for their employees, and they cannot sell their property and lose money on it.
Okay, so then that begs the next question. It's not only Bitcoin that they're mining, is it?
It is. It's only Bitcoin that they're mining.
Okay, what about the other currencies?
The other currencies, such as Ethereum, there are some Ethereum mining facilities, but the main one is for Bitcoin.
It is, okay.
And a lot of the other cryptocurrencies that are out there are not as popularly mined.
Will that change?
It can change. There are some of these cryptocurrencies that are mined by the global population. So I can be a miner of a certain cryptocurrency. You can be a miner for that currency, and so can you.
Okay.
And so there are millions of people like us globally who like a certain cryptocurrency, and they say, hey, how can I mine this cryptocurrency? Years ago, there were individuals that were mining Bitcoins, just regular folks like you and I, sitting at their desk, mining Bitcoin. And through the years, as the algorithm became more and more difficult to mine and more expensive, those mom and pop miners have become less and less.
Okay, so for our listeners, because there's going to be traders and there's going to be investors, but let's just assume people like what Jim and I have as clients, they want to be investors, and we're advising them and recommending that they consider doing this. And if they were to do it, how could they do it on their own? And then for those traders, let's address those too. So let's give a couple examples.
Let's talk about the investment perspective of it, because I am a true believer of investing in cryptocurrency versus trading it. And I do trade it as well, but investing it is very simple. It's actually one of the questions that you and I discussed, where it says, if someone wanted to buy $100 worth of Bitcoin today, what can they do?
Exactly, yes.
The first step is you need to create your own account on an exchange. The largest exchanges in the United States are Coinbase, which I'm sure you guys have heard of, as well as Binance.us. And there's a third one called Gemini.
Okay.
These three exchanges are extremely secure. And you simply log on, create an account. You do have to upload a driver's license or an ID. You have to link your bank account, which is very safe. And you have to give them some of your credentials, such as your social security number.
Yeah, I've done that with Gemini.
And once you create the account on an exchange and you have linked your bank account, you can actually transfer some funds from your bank account onto the exchange, USD, US dollars. And it's almost instant at with some exchanges.
So that's the simplest and most direct form of investing in crypto on your own. So,
yes.
So
the other way is through your broker and through the ETFs.
Okay. Which we probably wouldn't recommend necessarily. I mean, we could put that in an individual's portfolio just so they have some exposure.
It gives you
but
exposure.
More ideally, it would be better if they would consider doing this. Now, to that point, how do they invest? Like, what do they choose other than Bitcoin? Because we know Bitcoin is Bitcoin, but what about the other, as you describe, alternate coins?
Right, alternative coins.
And also, isn't there memes too?
There are, if I would give you a pyramid, imagine a pyramid, okay, where we have a pyramid. The base of your pyramid needs to be Bitcoin and perhaps Ethereum, because Ethereum is the largest altcoin. It's the number one altcoin after Bitcoin, okay? I want our viewers to classify Bitcoin completely on its own, and everything else is an alternate coin or the altcoin. And Ethereum is the number one. And so at the base of your pyramid, you need to have the long-term hold.
The granddaddies.
Yes. Which is Bitcoin and Ethereum.
Okay.
And we can say there are several layers to your pyramid. Let's just choose 4 layers to your pyramid. The next layer on your pyramid should be perhaps your all-American investment. The cryptocurrencies that were developed in the United States. I can name a few of them if you guys want.
You did before.
Cardano, ADA.
Is Solana one?
Solana is definitely one of them.
Yeah.
Link, ICP, HBAR, XRP. These are cryptocurrencies that were designed to create a real use case for the blockchain. I'm going to quickly step back just for 1 minute. Bitcoin and the Bitcoin blockchain is very slow. If I wanted to send you a transaction from here, let's say you're in Dubai, and we're doing a $10 million transaction, and I send it to you in Bitcoin, it can take hours for that transaction to get to you, which is very nerve-wracking. Because once you press send, where's the money? So there have been a lot of companies that have said, this is so slow, we need to increase the speed. Ripple, or the mother company of the cryptocurrency XRP, came up with a solution and said, hey, we should be able to do this in lightning speed. So when I press send, within a few seconds, you get that 10 million and I can rest peacefully at night. And so at your base, we need to have the Bitcoin and the Ethereum. And on the second level, we can have some of the alternative coins, your all-American portfolio, which that's what I like to call it. And then the next level is perhaps maybe less than 10% of your portfolio in some of the other altcoins that are out there.
Okay, so we're closing in towards the end of the podcast. So what I wanted to do, at least 1 or 2 quick trades, if you can, since you have your computer there. If we can give the audience and our listeners an example, if you're able to do that.
Certainly. I wanted to quickly, if we can see this here, I wanted to touch up on Bitcoin, for example, right now and what's happening in the crypto market. And so from a trade perspective, we see Bitcoin forming this pattern here of what's called a head and shoulders. And
that's not the shampoo.
It's not the shampoo, no. And so, from a technical perspective, we see Bitcoin possibly moving into a slightly lower level. somewhere around here, anywhere between 65 to 70,000 per Bitcoin in the next maybe 6 to 8 months, let's just say.
Okay.
But Bitcoin really loves to work in harmonic patterns. And so these patterns that you see here will essentially play out exactly the same in the other location. Let me just quickly clone this. And so we can pretty much see that it's almost going to form this same type of a pattern. One of my mentors, he owns a Discord group. His name is Bleeding Crypto. He's really one of the most amazing guys I've met. He always likes to talk about harmonic patterns and how harmonic patterns work in cryptocurrency. And I think in this instance, he's been really spot on in saying that, hey, we have a harmonic pattern that's playing in this area. And where should we look for harmonic patterns in the cryptocurrency world? The other thing that I would quickly like to touch up on is I actually created this.
Before you go there, if you were to go back historically, you can replicate those harmonic patterns. You went from where it is currently, where it potentially can go, but if you went back historically, you can create that same pattern repeatedly.
You can. If you look at the history of Bitcoin, and if we go, many, many years back, you can find patterns in the Bitcoin algorithm, and these patterns will mimic themselves.
Okay, so do you trade on that basis then?
Yes, you do. And, for a quick example for here, just kind of knowing about the Bitcoin halving cycle and what has happened, many times we've had a top, and now we've had a top. And so we can see that in the past, Bitcoin has gone down 84%. From the top here, Bitcoin has gone down 76%. And now from this top over here, over the years, we have kind of seen that Bitcoin is going down less and less and less.
Yeah.
So it ties in with the ETFs and the legitimacy of the space and it becoming more stable in a sense. And so from a trade perspective, we look at these patterns and we say, are they repeating themselves? And many times history rhymes, right? And we know we can see that in many of the asset classes. I found a very interesting chart the other day, and I wanted to share that with you guys here. I thought it was really, really interesting to see this. If I can pull it up very quickly here. It's not working that well for me at this point. But I would like to mention that crypto is certainly following what the Fed is doing. And because crypto is so forward moving, I believe that crypto is actually thinking light years ahead. And if Jerome Powell is saying that QT is going to somewhat end and QE is coming in, right? Quantitative easing maybe in the horizon, crypto will price that in very quickly. And the market sometimes moves into this bullish pattern, which we do see happening in the next several months.
Okay, so we're going to be closing our episode here. So in summation, which is what we do customarily, give us 2 or 3 major bullet points really quickly, briefly, that people should think about.
Definitely. Cryptocurrency is a investment strategy that is long-term. You always need to think 4 to 10 years out.
Okay.
It is extremely safe. Many people think it's used for money laundering, and it's been a lot of that in the news, but it's not, in that sense, it's not used in that way in many transactions and in many times. And it is becoming more and more popular every single day. So to our listeners who are even remotely thinking about it, I would highly recommend to study it slightly, look into it, talk to your financial advisor like you guys, and maybe allocate 1 to 2% into the asset class. You have to slowly nibble into cryptocurrency, never put all your eggs in one basket. If you have a little money to invest, take your time doing it. Don't just rush into it. One of my biggest mistakes years ago is that if let's say if I had $100, I would put the $100 right into the market. Now I'm very cautious and very
more
careful,
deliberate. Yes,
very slow and very careful.
very good. That's excellent advice. We appreciate it.
Thanks,
We
guys.
appreciate
False
you.
averaging.
Yeah. We appreciate you coming into and
It's my
being with
pleasure.
us.
Thank you, guys.
And don't forget, everyone, if you like this episode, be sure to hit the like button and subscribe to us as well.
Or feel free to share your comments.
It would be great. And if anyone had any questions, they can always post a comment and I'll answer it there.
Absolutely. Okay, Doctor, thank you again
Thank you
being
for
a
having me.
guest.
Thank you. And I think we should try to do this again, expand a little bit more.
Yes.
So hope to have you back sometime soon.
It would be my pleasure.
Thank you.
Awesome. Thank you.
Thank you for joining us on this episode of Enlightened Wealth Strategies. We hope you found today's discussion insightful and inspiring.
If you enjoyed this episode, don't forget to follow and subscribe to our podcast. You can find us on YouTube, Apple Podcast, Spotify, or your favorite podcast platform to stay updated on new episodes.
Your financial journey doesn't end here. Connect with us online for even more resources and exclusive content.
Until next time, remember, financial enlightenment is just an enlightened wealth strategy away. Investment advice is offered through Bell Point Asset Management, LLC, 500 Demont Ranch, Parkway Building 700, Unit 700, Reno, Nevada, 89521. Additional information about Bell Point Asset Management is available on the SEC's website at www.advisorinfo.sec.gov. It is important to read our disclosures available at this link, www.bellpointasset.com, disclosures. The information provided in this presentation is educational and limited to the dissemination of general information. This material is not intended to be a recommendation of any kind, investment, tax, or accounting advice. Does not constitute a solicitation to buy, sell, or hold a security or an investment strategy. Engage in any financial transaction and is not provided in a fiduciary capacity. The information provided does not take into account the specific objectives or circumstances of any particular investor or suggest any specific course of action. Investment decisions should be made based on an investor's objectives and circumstances and in consultation with his or her financial professionals. While the advisor uses reasonable efforts to obtain information from sources believed to be reliable, the advisor makes no representation that the information or opinions contained in this material are accurate, reliable, or complete. All information and opinions contained in this material are subject to change without notice. The views and opinions expressed are for informational and educational purposes only, as of the date of the production or writing, and may change without notice at any time, based on numerous factors, such as market or other conditions, legal and regulatory developments, additional risks and uncertainties, and may not come to pass. This material may contain forward-looking information that is not purely historical in nature. Securities offered through Fortune Financial Services, Inc., member FINRA and SIPC, Bell Point Asset Management, LLC, and Fortune Financial Services, Inc. are not affiliated. Past performance is no guarantee of future results. Investing involves risks. Principal losses possible.